Hi everyone, welcome to Tuesday, and of course we're going to take a look at the performance of the NZSX50 for the week. Just remember that this is for educational purposes only. No way is it intended to be personalised financial advice. For that, you do need to go and have a chat to your own advisor. However, if you're wanting to learn about the share market and share trading, by all means, reach out to me with your questions, and I'll certainly do my best to address them here for you. So right, let's take a look. Right, I've got the main board for the New Zealand Stock Exchange up here on the screen, and you can see here that we had a little bit of a down week last week. There wasn't a lot of movement or a lot of volume. There's only about $107 million worth of volume. However, unfortunately, the week was down. So it does look like we're definitely getting sort of that line of resistance, if you like, sort of around that 12,800 points level. Now, I am recording this on Monday, and already the market is up just for the day, just in the first sort of couple of hours of trading by about $33 or 0.26%. So nothing to get too excited about there. Right, let's put our moving averages on and just see how everything's working in relation to that. So we will use the 30 exponential. You can see here that the market is trading above that 30-week moving average. So that is a good positive sign. Let's also put on the 15-week moving average, just to give us a comparison between sort of a fast one and a slower one. And you can see that the market is trading above both of those, which is great. It's very, very close to both of them, but it's definitely what we want to see in a potentially upward rising market. Obviously, like I've said for numerous weeks now, we want to see our market sort of start to rally, start to gain some traction and really get onto that positive side of things. And hopefully we might be starting to see a bull market run. But we do need a little bit more confirmation before we could certainly look at that. Let's just take a look at the daily chart and just see how that's happening. And you can see here by this dashed line, we've really sort of got a line of sort of resistance forming there, if you like. Hopefully we can break through it, which would be very, very encouraging. Let's go back to the 5-year chart. If I look down the bottom, there was a reasonable amount of volume traded last week. Not so flash or anything like that, but there was a reasonable amount of volume, especially for the market sort of selling off. So we want to see more volume, but we want to see more volume with the positive weeks going through for the NZSX50. Now, when I was doing my research yesterday to see if there were potentially any more trading signals that we could look at for the New Zealand market, I took out my existing holdings, and I've got about 5 shares that I'm holding at the moment. So that limited me to about 45 shares that I could look at. Now, out of that, when I ran a comparison of each individual share versus the index, there were only 17 shares that were trading above the NZSX50. So that means that there's only about maybe 23 shares out of 50, so not even 50% of them, that are actually driving the performance of the NZSX50. We need to see a lot more involvement from a lot of the other shares that are making up the main board, because certainly sort of 20, 22, 23 is not a lot. It is getting to 50%, but we need over that 50% mark before we are really going to see our market rally. Now, the other interesting thing that I found when I was doing my research yesterday or over the weekend is that of those 17 shares that I was perhaps looking at that could have been candidates, if you like, for purchases this week, all of them bar one. So in other words, 16 of those shares were actually trading below their own moving averages. So that is a really interesting sign. They were either trading below their moving averages, which for me is an automatic knockout. I wouldn't review a share any further if it's trading below its moving averages. And the other thing that I look at as well is if there's 2 red candles in a row, whether it's on the weekly chart or on a daily chart, it means I do not go any further. And that was a really interesting find yesterday, for the fact that there were only 17 companies that were trading above what the main board was doing. But out of that, there was only one share that was trading above both the 15 and 30-week moving average. And that one share had 2 red candles in a row. So that, for me, was 100% knockout. So there were definitely no more buying opportunities this week. It certainly does look like for the NZSX50, it is in a trading range. We are certainly going sideways, and we've seen this for some time. In fact, if I look back on my chart, we had sort of highs around August 2021, where the volume was at about 13,200. And you can see by that dashed line, we've got a little, if I just move it up a bit, here we go, we've got a little bit further to go before we get to those highs. Would certainly be great to see us do that. But really, we've just been languishing sideways. So certainly not a lot to get excited about at the moment. Now, on Thursday, hopefully you're going to come back and watch this. I was working with someone recently, and they were interested in investing into the share market. They can certainly stomach the volatility, the ups and downs, and they were keen to look at the S&P 500, basically as a set and forget and auto invest type of investment. So that's what we're going to review on Thursday. I'd love for you to come back, have a look, and see what you think. But in the meantime, happy trading. And hopefully we will start to see some positive activity in our market going forward. Fingers crossed. So until Thursday, take care.